One of the more compelling points made by Tesla supporters is that they expect major automakers such as Ford, Mercedes, Honda, and Toyota to release a Tesla killer at some point. There are many reasons why Tesla currently has no real competitors. Tesla seems poised to conquer the auto industry in a few years if one does not emerge soon. Completely electric cars are becoming more common. There are many explanations for this, including new safety and vehicle emissions laws, technical advancements, and changing consumer preferences. However, Tesla Motors and its unique business model can be credited with a large part of the public's acceptance and enthusiasm for electric vehicles. Elon Musk, the company's founder and CEO, founded Tesla with the aim of accelerating the advent of sustainable transportation by bringing convincing mass-market electric cars to market as soon as possible. Tesla's effective business model is built on this goal. Let's see how that business model has become so successful that Tesla has made it to the top that no other car can compete with. Tesla's beginning. Tesla took a unique approach to break into the industry. Instead of focusing on creating a relatively inexpensive car that could be mass-produced and sell, it focused on creating a convincing car that would generate demand for electric vehicles. If we could have mass-marketed our first product, we would have, but it was literally impossible to do for a startup company that had never produced a car and had one technology iteration and no economies of scale. Tesla CEO Elon Musk said in a post on the company's website about the company's goal. Since we knew our first product would be costly no matter what it looked like, we wanted to create a sports car which seemed to have the best chance of competing with its fuel alternatives. As a result, Tesla introduced the Tesla Roadster, the world's first high-performance electric luxury sports car. Until ending production in 2012, the company sold approximately 2,500 Roadsters. This isn't a figure that would make anyone at General Motors nervous. Where's the competition? Citron Research shorted Tesla 5 years ago because they predicted that by the time Tesla's product reaches the market, there will be many other 200-mile range plug-ins that have been on the market for years. Citron said that they reversed their short position because Tesla is killing the competition. But what is the rivalry? Is it the electric vehicles? Is it high-end automobiles? Is it entirely made up of automobiles? According to the quote above, Citron believed that competition would come from other 200-mile range plug-ins 5 years ago. According to recent news, Tesla is drawing buyers from all segments of the luxury car industry, not just the all-electric luxury car market. This is good news for Tesla, but bad news for companies that produce vehicles with internal combustion engines. Tesla will be able to make a profit on lower-priced cars that can compete with ICE cars across the board as production ramps up and fixed costs are split into more cars. Elon Musk said on Wednesday's earnings call that Tesla could increase production from 5,000 to 7,000 cars per week without spending a lot of money on capital expenditures. Just think about it. Tesla can produce 40% more cars without significantly raising their fixed costs. Musk did not say so, but I believe it means that fixed costs per vehicle are going to drop by 40%. I believe Tesla will be able to compete profitably for mainstream car buyers once this occurs. How competitors react. I'm surprised, just like Citron Research, at how unsuccessful the major automakers have been in creating a Tesla killer. Ford seems to be fleeing rather than competing with Tesla. Ford revealed in April that it would discontinue production of conventional cars in favor of crossovers and SUVs. From an accounting standpoint, this approach makes sense because these are Ford's most valuable goods. Ford's decision to concentrate on high-margin goods just saves them from competing with Tesla for the time being, as there is no reason Tesla couldn't make an SUV. Mercedes and Volvo have seen concept cars, which means they are both years away from going into production. GM is currently marketing the Chevy Bolt, which appears to be a rival on paper. However, according to Gordon Lamb, sales of the Bolt dropped 40% in September, while Tesla's Model 3 was the 5th best-selling vehicle. But people have spoken. Take a good look at both vehicles. Which one would you like to own? It's almost as if General Motors were trying to avoid selling too many Bolts. This makes sense if the Bolt is a money loser for GM and it's just being sold for ZEV credits. I'm not sure what GM is thinking with the Bolt, but it's not a Tesla competitor. Tesla's stock performance. Today, Elon Musk is beaming from ear to ear. Tesla stock jumped nearly 12% after a former short seller cried uncle and admitted that Tesla was destroying the competition. On the Entrepreneur Index TM, the stock had by far the largest benefit. The index ended the day down 0.26% after a volatile day. Citron Research, which is involved in a securities class action lawsuit against Tesla over tweets Elon Musk made about going private earlier this year, released a note this morning claiming that Tesla's Model 3 is causing legitimate disruption of the auto industry. Yesterday, Tesla announced that it would report earnings on Wednesday, a day earlier than anticipated. If the company reports a quarterly profit for the first time and meets sales goals, as Musk has promised, the remaining shorts on the stocks can feel the pinch. Tesla's big day came against a market that swung from another big sell-off in the morning to a promising recovery later in the day. The 10-year Treasury bond yield fell 8 points in the morning as investors switched money to safer assets, then rose 5 points in the afternoon as investors returned to the stock market. The main indexes were down more than 2% early after weak results from Dow Index components Caterpillar and 3M. Caterpillar lowered its full-year outlook, citing increasing costs and tariffs as reasons. Fears of a weakening global economy and peak earnings for U.S. companies were fueled by the results. Concerns about first quarter results. On April 26th, Tesla announced first quarter results that exceeded Wall Street expectations, but analysts questioned how it was done. Revenue increased by 74% to $10.39 billion. This is the company's highest sales performance in 10 years. Adjusted earnings of 93 cents per share beat Zacks Investment Research's forecast of 79 cents. Analysts, on the other hand, were concerned about how the company managed its earnings beat. Tesla earned $518 million in regulatory credits during the quarter, up 46% from the previous quarter. In addition, Tesla made a profit of $100 million by selling $272 million in cryptocurrency during the quarter. In early February, Tesla bought $1.5 billion worth of Bitcoin. In a note to investors, Louis Navellier, Chief Investment Officer at money management company Navellier & Associates, wrote, "In other words, Tesla made $618 million in the first quarter from exceptional products. Tesla won $1.58 billion in electric vehicle tax credits in 2020, but only made $721 million, implying that the company lost money building EVs. When the coronavirus epidemic first struck a year ago, the organization faced simple comparisons. It also helped that Tesla's Shanghai plant had just recently begun ramping up Model 3 production and had begun producing the made-in-China Model Y for the first time in the first quarter." Will massive expansion bolster Tesla stock? Tesla has significantly increased its production capabilities. Musk plans to produce 20 million electric vehicles a year by the end of the decade, which is more than twice the current output of other automakers. So the company is now on a quest to quickly increase its manufacturing capabilities. The expansion would include the building of a third manufacturing plant near Berlin, where the Model Y will be manufactured. Tesla is planning to develop its fourth factory near Austin, Texas. The plant, which will be constructed on a 2,000-acre plot of land, will be Tesla's largest. It will make the Cybertruck, as well as the Model Y and the Model 3, as well as its big rig truck, the Semi. What makes Tesla so unique? Many Wall Street investors are baffled as to why Tesla's market cap continues to climb above that of big auto stalwarts. Isn't Elon Musk automaker yet another car manufacturer that happens to specialize in electric vehicles? No, no, and no. There's far more to it than that. Investopedia's Christina Zucchi shows some of the hidden sauce that distinguishes the Silicon Valley automaker. Tesla is often referred to as a tech company due to its continuous software updates and ever-evolving autonomous driving features. According to Zucchi, Tesla, like other tech firms, is focused on disrupting established business models in the stodgy automotive industry. Its product pipeline and creator have a devoted following close to that of well-known tech companies like Apple. It all begins with a unique sales strategy. According to Zucchi, Tesla sells directly to customers, unlike other car manufacturers that sell through franchise dealerships. It has developed an international network of showrooms and galleries operated by the group. Tesla also saves money by selling direct. They improve the shopping experience for customers. Tesla showrooms, unlike car dealerships, are free of potential conflicts of interest. Customers just negotiate with Tesla sales and service representatives. Tesla also has been a forerunner in online auto sales. Tesla decided to construct its own service centers in the absence of franchise dealers. In addition, according to Zucchi, Tesla has Tesla Rangers, which are mobile technicians who make house calls. The service can be provided remotely in some situations. Tesla can wirelessly upload data, allowing technicians to view and repair some issues without ever touching the vehicle. While conventional automakers have begun to launch electric cars, sometimes reluctantly, their road trip charging options are often restricted, relegated to disparate third-party networks. Tesla, on the other hand, has its own patented supercharger network, which has become the industry's gold standard. According to Zucchi, Tesla has a distinct advantage because it has built its own network of charging stations to address one of the most significant barriers to electric vehicle adoption: refueling on long trips. And Tesla just isn't about cars and trucks. A line of home batteries called the Powerwall, according to Zucchi, serve as energy storage systems in homes, meant to connect with solar energy systems and can be used as backup power when power is disrupted or peak demand is high. In short, Tesla is a game-changing technology business with a well-defined 360-degree strategy for deploying renewable energy solutions around the world. And let's face it, as fossil fuels lose favor with today's investors, Tesla remains the high-profile company and stock that attracts an enthusiastic, future-focused, and loyal following around the world. As we near the end of this video, I'd like to thank you for taking time to watch it. Please remember to subscribe to our channel and turn on the notification bell if you don't want to miss any new content. If you enjoyed it and found it useful, please give it a thumbs up. Thank you, and see you next time.